All right, not a whole lot we can analyze tonight. I guess we can. The fact that last week, and this is always a telltale sign that if they're gapping down below the or at or below the open of the previous candle, that's your first clue that there's been a drastic change of investor sentiment. Get ready to see what happens from there. And as we saw last Thursday, I think that was the day they reported the 7.5% inflation rate. The market gapped down, but then it turned around and started coming back up. Looked good, like it was a knee-jerk reaction. But here's one of your a very obvious stop point, that if they came back down through the open after opening there and trading up, giving you the indication there had been a drastic change of investor sentiment, that if they had kept it up, all right, knee-jerk reaction. But the fact that they brought the markets back down, and that was on the announcement that the Feds thought they were going to probably raise rates at least a full point over the next 6 months, then the market sold off. That was a good clue that when they came back down through the open, it was time to be out of any long positions that were looking weak and definitely going short. So with that analysis, now you've got the benefit of the next confirming indicators that allow us to maintain positions even through the whipsawing motion during the day. And that was when they closed below the T-line, stochastics heading down, especially the fact that they're closed below the T-line. That now puts you in a much more comfortable analytical atmosphere, knowing that as long as the indexes are closing below the T-line, you stay short. We saw that same scenario over here in the NASDAQ. When they gapped it down below the previous day's open and stayed down, that gave us the, now let's put it this way. That's why you want to be aware of what should be happening or what type of signals can occur based upon that setup, which means a gap down doji type day below the previous day's open. If it trades lower, what do we got going on? A bearish doji sandwich. Trend line, how many days? Felicity, I don't know what that means. Trend line, how many days? You're going to have to T-line. Oh, the T-line is 8 exponential moving average. Walter, you might have to log out. Is anybody else's sound bad? All right, Walter, you might have to log off and log back in and see if you can get a better connection. All right, so now, what's our next analysis? Well, if they open this lower, what do we got going on? A bearish flutter kicker signal followed by a bearish doji sandwich. What's that imply? The downtrend is still in progress. And so that goes to our next analysis. What type of pattern setting up? Well, there's your bearish J-hook pattern setting up. Now, does that imply we might have another big downtrend? Not necessarily, but at least it implies that they're going to come back down and test this level to see if there's going to be a double bottom. All right, so why is the market analysis important? Because if we know which way, Jim, yeah, we don't know what's going on there. they've pretty well announced that they are probably yeah, I should put it this way. Maybe the mic is too close to your mouth. I'm getting R. Walter, I don't know. You're getting an echo. You probably still have to log off. Go up to the little red X up in the top right corner of your screen, log off and log right back in and see if that doesn't get you in with better sound. Where was it? Okay, so it could mean we're heading in a downtrend. But now I just checked. Walter isn't logged in twice. Take it. All right, so if that's the case, here is the simple analysis that I've done that took me a while to get through my emotional hopefulness. That the first time I see a sell signal and a close below the T-line, I'm immediately putting myself in a mental condition to say, I now should probably be orienting toward the short side. Now, the reason I do that is because before, when I saw this, I was hoping that maybe that was just a down day and the uptrend and all the long positions that I had are still going to work. I just hated the idea that the ones that I was buying are still about break even, and I was hoping to make big money on this new uptrend instead of analyzing what is the chart telling me. All right, good, Walter. So I've now gotten very accustomed that as soon as I see a close below the T-line, I'm immediately analyzing which stock should I be closing out on the long side, and I should start looking for some short positions. So right now, I hear a lot of people say, oh, I wish this market would turn around. This is killing me. The answer is it shouldn't be killing you. You should be oriented toward the short side. And I say this with a great degree of pride, I guess, because so many years I was sitting there saying, man, this market is killing me. This market is killing me. When is it going to turn around? Instead of saying, oops, I should have been short up here. Then once I started doing that, when the market was doing this or the market was doing this, I sat there very comfortably because now I knew I was in the right direction, being predominantly short. So to be predominantly short, I'm looking for those strong sell signals. Now remember the one rule of thumb of the Japanese rice traders. The bigger the signal, the more compelling there's been a change of investor sentiment. And what type of pattern do you think this is setting up? Wave 1, wave 2, going into wave 3. Where would I at least project that the next price move can move to? Whoops. That's my downtrend. They could still be selling this off. Now, is it feasible that a stock that was once trading up here at 175, 6 months later, could be trading down to 25? We don't need to figure out whether that's feasible or not. All we have to do is see that's what they're doing. And I kind of remind myself of this because I can't imagine a stock that was trading at 35 could be trading at 17, could be trading at 12, or trading down to 7. And I closed out half the position here, and I closed out the other half here because I thought I got most of it. But what was the one tool that we can use to tell us, all we had to do is stay short? It never got back up above the T line. We recommended Lulu because there's wave 1, wave 2, wave 3. Wave 1, wave 2, wave 3. Now, here is why the visuals of candlesticks make it much easier to see this is rolling over. Look at your evening star signal with a doji gap down. Look at your doji shooting star close below the T line. What should be your assumption of the direction of this stock? Well, obviously, it's in a downtrend, and every time they take it up and then bring it back below the T line, they're taking it back down. Can you make your screen presentation larger? Rob, if you go up to the top of your screen, or in the gray line, there's a little icon that has the arrows pointing in and another with the arrows pointing out, like a box. Click on one of those and see if that doesn't get you to the right size screen. Okay, so here's the first assessment. Strong sell signal. Second assessment, closing below the T line. Then we can see they couldn't get up through the 200. And then your final assessment is, what direction have they been trading this stock? In a downward direction. Or buy a bigger monitor. So here's the different trading strategies. Roger pointed out on either Thursday or Friday that you could do a bearish, was it a put spread? Anyways, obviously that put spread is working very well in CG. And that's because you had a kicker signal, evening star signal, downtrend. So this is why having the ability to do what I call 2+2 analysis, when you can put more than one factor into your visual analysis, the higher the probabilities you're in the right trade at the right time. And I'm going to come back to a couple of option trading strategies here in a minute. There's your wave 1, wave 2, wave 3. Now, why would we suspect this could be a wave 3 and versus a reversal? My monitor is 32 inch bigger is better. Yeah, I think I've only got 30-inch screens. Why was this uptrend not real convincing? Can anybody see something obvious about this uptrend? It is kind of a dumpling top. It was above the T line. There you go, John. John hit it. This is not a reversal signal. There you go. Bruce got it also. So when this started up, here's the rationale for not putting a lot of weight into that uptrend. The Japanese rice traders have had 400 years of analyzing reversal signals. If this was some sort of reversal signal, they would have told us what it is. But out of the 50 or 60 candlestick signals, this is not one of them. So the assumption has to be, if this was a relevant reversal, they would have given it a name and told us what it should do. They don't. Now, I've seen recently kind of bantering back and forth that this is a one white soldier. In the 3 years now that I've been doing candlesticks, I've never heard of a one white soldier. It seems to be somebody's creation in the recent past. So here's one thing I want everybody to kind of keep in their mental arsenal. If you see something like this, I would go on to something else, because on a day like this, if this is having a big up move but not a reversal, there's probably a dozen or more stock signals out there someplace that are actual reversal signals. So that would be a rebel. There you go. Also, price action did not continue up. Ronald, but that is kind of the result. This tells you might have a bounce, but it doesn't have the same conviction as a reversal signal. Had this been a bullish engulfing signal, I'd have been much more confident. The fact that this was just a bounce up told you there probably wasn't a very strong price move. So now, that was a long dissertation to say this is what also adds to the credibility that this is kind of a bearish J-hook pattern, because it didn't have a strong move to the upside, no reversal signal, rolled over, but what was the strength to the downside? There's our bearish doji sandwich. And what vital, level did it breach? It broke through this level, telling us that's not acting as support. That gives you a much greater probability that wave 3 could be somewhat the same magnitude as this. Okay, AMT the same. Yes, we've got a bunch of these, but now you will need a little bit, probably a little. Well, no, maybe not. Well, let's do this. Maybe one more day, or if you see this open to the downside, what's it telling you? No reversal signal, and kind of a bearish kicker signal telling you wave 3 is starting. Good one, Nicholas. Anytime you see a strong sell signal, like a bearish kicker signal that breaches the T-line, where do you think the first target was going to be on this one? CVS, right back to the 50-day moving average. RGA, this was more observe the obvious. Bearish engulfing signal right here at the 200. Bearish engulfing signal right here at the 200. Tried to take it up, shooting star. Tried to take it up, shooting star. If this opens lower, where do you think at least your first target is going to be? Back here to the 50, which would also be evidence that this is rolling over. It's a belt hold, yes. Now remember, a belt hold just tells you they've wiped out a lot of sellers. So because you've got a signal that might be confirming, what's your next analysis? You're in an uptrend until you see a sell signal. So when it did this, that new signal told me, all right, that's overriding the belt hold. So just because you see a signal doesn't mean it's going to go up forever. You stay with it until you see a sell signal that's confirming. Let's see. Let me take a look at a few on the long side. Some of the oil stocks are continuing to work well. Hold on for 1 second. Okay, sorry about that. All right, so we can see that the P10, Patterson Energy, fry pan bottom type pattern, breakout to the upside. Now that was one of the few that kept up today. Apache, another oil company that sold off. Darren, hold on to your individual ones until we get to, I tell Jim to do the double line. Art, are you still in here? I think Art C. No, I don't see him. Today, Art was putting out a comment that their earnings are going to be coming up on the 17th. Should you be buying in front of earnings? And the answer is, we don't care what's happening. All we see is what investor sentiment is doing. Everybody that was buying and selling during the last couple of days also knew that there's earnings coming up over the next couple of days. But they were still making their decisions to be buying or selling. Zev pulled back but hasn't closed below the T-line. Blink pulled back but hasn't closed below the T-line. Now ITSE has been working very well for us. However, we're seeing a shooting star in the overbought condition. Is that the only factor we should be analyzing on this chart? No, the other thing is, look where that's occurring. Right at the same level they were selling before. So if we're starting to see sell signals at levels that everybody else was selling before, that just gives us a little bit more caution that if they start selling this off, you might want to take profits if you're long. You can always buy back if it supports at the T-line and starts back up. Now here is a belt hold that is still confirming. It's staying above the T-line, but I'd still use the T-line, a close below the T-line as my final criteria. But notice what this belt hold was doing. Pretty much adding conviction to this fry pan bottom type pattern. Frank, a belt hold is when you've got a trading range, then they move way out of that trading range and then come back up into it. The Japanese rice traders explain it as the two sumo wrestlers that are fighting. One's trying to back out of the ring, the other one's grabbing his belt and pulling him back into the ring, and they're back to fighting. And what this does, as far as the mechanics of the supply and demand, is lots of selling, lots of sellers down here, but the buyers are sopping it all up, and by the time they get back up here, they've taken out all the sellers, which means there's not very many sellers left in the way of the next up move. And pod. So this is where you observe the obvious. Had a nice bullish chart to it. The kicker signal, and then got up here, look what happened. If I was long on this day, when it came back down through this level, I would have closed it out. Because now you have a shooting star in the overbought condition, right at a level that everybody else was watching. That was a good time to be out of this trade. This is, let's see. Tomorrow. Tomorrow we're going to be working on stop losses. Members only. And that would be one of them. But if they take it up, doing what they're supposed to, but then come back down through the open, what's that going to create? Probably going to create some sort of candlestick sell signal right at this level in the overbought condition. That's where we start saying the probabilities are starting to go against you. Okay, I'm going to let me take a look at a few of the biggies, then I'm going to come back to kind of a quick option strategy. Tesla, that's pretty much a nothing chart. If you're short, you can stay short with the expectation they could be coming back down to the 200. Amazon, if you're short, you can stay short. Ever since they failed and then gapped down, kind of doing a bearish doji sandwich. This is not a reversal signal. First of all, it didn't close above the T-line. Second, it didn't close above the halfway point. And third, your stochastics are flat and still kind of a lower, heading down. All that alluding to the fact that there's no buying pressure right now. Apple, same scenario. Even though this is a positive candle today, get rid of that. It's not a reversal signal. Your stochastic's still heading down. You're still coming off this evening star signal. And remember what gives a little extra strength? Vasu, what are you typing in there? Did we kind of miss the instruction that we don't put our individual signals in until I tell Jim to do that? There you go. Yep, oops. But you can see how they gap down on the third portion of this evening star signal, telling you there's a lot of force to the downside, which means this is not in an uptrend until you see a dramatic sell signal. I'm sorry, a dramatic buy signal. Same scenario here on NVIDIA, not kind of a nothing chart, but with the implication that it's heading lower. And Netflix, nothing here, as long as you're below the T-line. That's all right, Vasu. Okay, I'm going to go back up here to net. So here's your full analysis. I'm going to make this smaller for a second. Which direction is this obviously moving? In a downtrend. Where was the selling? At an obvious level that everybody else is watching. Now, you could be buying the puts. What did we say? You could be buying the March 4th, a couple weeks out, the 100 puts, 100s, from around 585. Now that's one trade. But here's another trade. We could do a bearish or do a put spread. And I think if you did the 105 100s, was, I think, around $2.10. The 105-100 put spread was 215. Okay. But that would mean it has to go down to 100 to make $2.90 on that trade. So it had to drop, still has to drop about 5 or 6 points. Or the other side of that trade would be that you sell the call spread. And remember, selling a call spread is a bearish trade. You'd be selling the 105s for, I forget what it was, $5.20. But then you'd be buying the 110s. This was for Friday's expiration, Eric. Let me explain a little bit further. If I'm doing a debit spread, I'm usually wanting to go out about 2 weeks. If I'm buying calls or puts, I'm going out 2 weeks and further. But if I'm doing a credit spread, I want to stay fairly close, because obviously the more time you have between now and expiration, the more it can swing in the opposite direction of what you think it should be doing. So this was for the February contract, which expires this Friday. So if you sold the 105s for, let's say, 520, and you bought the 110s for, I think it was like $3.10, you'd be putting $2.10 in your pocket. Okay, it was about 202 for a credit spread. All right, so what does that mean as far as price movement? Well, first of all, for the 105-100 put spread, it needed to go down basically 5.5 points between now and Friday to have that $2.10 spread that you paid for go to $5 and make $2.90. It actually had to go down about 2.5, a little over 2.5 points to break even. Now, buying or selling the put or the call spread for the 105s for 520, what did I say, and buying the 110s for 310, you put $2 in, MC's got it. It was actually 202. So you put $2 in your pocket. Now what does this have to do to make $2 on that trade? All it has to do is close below the 105 level, and you keep that $2 in your pocket. So here's the assumption. We think it's heading down. And it doesn't have to head down very much for that credit spread to work. So the stock price would have to, on the put spread, have to have gone down to 103, essentially, to break even on that spread, then to make money after that. To keep that $2 in your pocket on the selling the call spread, all it has to do is go down 50 cents. And then to break even, it needs to stay below 107. Because if it goes back up to 107, you have to close out the trade for $2. You're basically breaking even. So the risk-reward factor looks like you're much better off anticipating that it could be drifting lower or even smashing lower. So obviously, if it takes a big downdraft, yeah, you were better off in the buying a put spread. If it just kind of drifts in here for the next few days, the risk reward on the selling the call spread is much greater, much better. We're going to do a session here pretty soon on the math of the credit spread versus the debit spread. So I'll try to have that put together here within the next week. Okay. So let's go back to Lulu. Lulu looks like a perfect setup for a bearish doji sandwich. This one I'd probably be looking at maybe a couple weeks out, buying the puts, because it could easily drop back down to the $3 or the $300 level. Okay, there's a few, they look good when I wrote them down. Let's take a look. Vox. Vox looks like it's trying to support above the T-line. So that one you'd stay long. Oops, this one was looking better early in the day with it trading up near the top end of the range. However, when it came back down here, made it very simple. If you were long this, if it opens lower tomorrow, you want to close it out. Joe, no. I buy the option strategy that makes the most sense money-wise. Sometimes that's in the money. Sometimes that's out of the money. And then sometimes, obviously, it's at the money. I want to see which ones make the most sense risk-reward-wise, and that's what we'll go through. And, sometimes you're better off if you've got a real fast-moving stock or something that gets whipped around to buy way out of the money call spread so that you have very little money involved, but if the trade works, your reward is pretty big, but you don't have that much money at risk. So there's all different things. Would you consider selling a call spread? You could if you wanted to, but again, on Lulu, if I'm doing a credit spread, I'm doing it on the basis that I'm going to do it at very short term, like this Friday. But if I'm going out longer, I'm probably going to be probably just buying the puts or a put spread. Tesla would be that. Yeah, that would be something where I might do a spread down here in case it's supporting and sideways. But that would be something I would be more apt to do, seeing weakness in the markets and the stock tomorrow. Now Splunk did a kicker signal, and I forgot why. Was it a buyout? Anyways, there's a kicker signal on Splunk. ENB, there's a bearish kicker signal. Where do you think the next targets are? Right here. Now, that's not that far away, but there might be a very strong spread that you could do down here that would make a lot of sense. It could be. Could this be wave 1, wave 2, wave 3? Yes. But it depends on what your risk factor is. Maybe you do a 300, 290 spread. Oh, well, Cisco rumored to buy Splunk. All right. But everybody says, well, how do you do your wave count? This is wave 1. This is wave 2. This is wave 3. You can see how wave 3 is about the same as wave 1. What is this wave count? I don't really care. This now becomes wave 1. Wave 2. Wave 3 should be that wave right there. had earnings on the 11th. Okay, on ENB. What one? Oh, that was Friday. All right. All right, but that told you exactly what people felt about those earnings. They didn't like it. Now that you have a much better view of which direction, they are probably, oops, I didn't even get close on that one. What the investor sentiment is on that trade. ASAN, you can see the bullish left-right combo. Now this is again where you put 2 plus 2 together. Left-right combo. What was the next thing you could assess? They closed above the T-line. What's the next thing? They broke this downtrend. Where do you think the first target was? Right here at the 50. Now what did they do at the 50? This is why I always gotta advocate knowing what each individual signal tells you. They did a kind of a trend kicker signal up through the 50. Where do you think your next target is likely going to be? Probably back up here to the 200. Just because of adding that to the assessment, that you're in an uptrend and now you've got a trend kicker signal telling you that uptrend is probably likely to continue. Todd, are you in here? No, don't see Todd. Todd was saying go short on, or he was shorting IBM. Again, look where it failed. Pretty much at a level that you can see was a failure level. Also the 200. And look how they started the downtrend. There's your little bearish best friend. Another reason why you want to know the top ranked signals and patterns, because you could make a living just on the best friend signal in conjunction with patterns that it's setting up. All right, this one had, did they have earnings today? I know, Hound Dog was following this one. So anytime I see something like this, the next thing I do is I go see what the news was. If it was an upgrade, I don't pay attention to it very much. If it was earnings or if a contract or partnership, that would imply there could be more upside. And THS, there's that gap up. Another reason to go see what the news was that created that one, or created that move. And here's your breakout. Let me make this smaller. Pretty much a breakout through this level. Expect a 45-degree off of here. All right, so with the markets heading in this direction, let's see what the futures are doing. Yep, showing the futures up 10 right now, which doesn't really mean anything. That means the charts that have good bearish patterns are the ones you probably want to be more oriented. CCI, bearish J-hook pattern. NVAX, looks like a bearish J-hook pattern. And how did this one get started? There's your little bearish best friend. So, again, wave 1, wave 2. If it gets down through this level, which even if you shorted it and it got to that level, you'd still probably be making some good money, because that's 10 points. Darren, that is a real book. That reminds me. I'll have to ask Abe. I know the folks in Australia can't get the books because it costs more to ship it than the book is. E-book. Darren, I'd be glad to autograph it, except we ship the books out of Houston, and I'm up here, but you saved the book. That if we ever run into each other, I will autograph it. CFLT. Lots of stocks are going to trade lower during a downtrend. What are we looking for? We're looking for the ones that are going to trade down strong. There's our shooting star gap down. Where would we start shorting this one? Well, it looks pretty much like if it breaks through what is kind of perceived as a trend channel, it means there's probably a lot more downside. We're looking at that on, oh, pshaw. Was it this one? Yeah, I was looking at this one on the basis of this was your trend channel, and it broke it here, came down through the 200, and then failed to get back up through the 200. That was pretty strong evidence that if they broke this level, and the reason we would suspect they could break that level is because of the strength of that sell signal. That just improves, if they came down through this level on a bearish doji sandwich, that's a pretty good indication wave 3 is now in progress. So these are just kind of little tidbits to adding things to the probabilities that they're moving in the right direction. This is Playboy, kind of the same scenario. Wave 1, wave 2, kind of a little best friend, wave 3. Worst case scenario, it could come down here, but that would still be a 10% move or so, just to see if it was going to work right. And Under Armour, another one. When they fail, right here at a level that everybody else is watching, you're in a downtrend. Where can you perceive to be the next price move? Down here. That looks like about a 12-15% downside. Then if they broke this level, there'd be a lot more downside. Now, can things keep going down, going down? Yes, this is why I use this one as an illustration. That as long as it stays below the T-line, you're still in a downtrend. How low can this go? Have no idea. And look at your bearish flutter kicker signal. This is on GPRE. Broke that level. What's that imply? Wave 1, wave 2, wave 3 is in progress. Is that the exact same chart practically as ADI? FND. Here's your bearish flutter kicker signal. Where would you want to see this one move to? If it broke this downtrend. Now we can see it come all the way back down into this range. Lowest it can go is 0, exactly right. This one's on floor and decor, which now leads me to wanting to take a look at lumber liquidators. What is it doing? That one's not as good a chart. Okay, so you got things like Ladera. Wave 1, wave 2, lots of little lines on here. All right. Wave 1, wave 2, wave 3. After they broke this level, more downside. And that's a potential strong reversal. Well. Nah. Where's the next likely target? Could be all the way back down here, which would give you about a 40% downside potential. All right, so the reason I'm pointing out so many of these, I didn't do that right. Whose handwriting is this? No, you don't know what that was. NDH. Nope, and I'll go on to something that I can read. Maybe that was it, NVIDIA, but we already did NVIDIA. If that opens lower, probably go into the 200. ACT, we did that one. I don't know why I put this one on here. ALVR. That one's not what I'm looking for. Well, this is not working out at all. So there's another wave 1, wave 2. Look at your hanging man, look at your shooting star, and look where you couldn't hold up anymore. This is WRBY. Oh, it doesn't really matter. You could start it anywhere, right in here. But the whole point of it is that if this is moved from, let's say, 300 down to 150, probably it's not going to go from 150 down to 0, but it's more than likely probably coming down to catch this trend somewhere, taking down toward 100. So you don't really, the magnitude of the wave isn't all that significant as far as being exact. Let's just say, well, the wave started about here, it could have this type of price move. Now, when I look at it and say it could have this type of price move, what do I analyze once it's in a downtrend? You stay short until you see a buy signal. Yes, the stochastics, as you can see, are starting to roll over to the downside. Okay, so again, this was a good, strong sell signal. Very compelling on, well, for crying out loud, how do I get rid of these things? The bigger the signal, the more evidence there's been a change of investor sentiment. So you're probably going to see this one on the short list recommendation tomorrow. Because this is, again, a strong reversal, bearish left-right combo in a downtrend. And where did it fail? Right smack dab off the 50, closed below the T-line. Wave 1, wave 2, going into wave 3. NOTV, right smack dab off the 50. Wave 1, wave 2, going into wave 3. Where am I going to be real convinced we're in wave 3? If it breaks down through this level. Now, why would we think it's going to break down through that level? Because look at the strength to the downside and look what your stochastics are doing. That tells you there's probably a good likelihood they're not going to support at the support level. Pro. Doji, wave 3 in process. TUFN, bearish Harami, gap down. If it goes through this level, look for a lot more downside. So right now, oh, that's not what I want to do. The assumption is, as long as you're below the T-line, and the longer the fear factor is hanging out over the market of 1, Ukraine, 2, inflation, 3, interest rate increases, there's just not any bullish sentiment in this market. All right. Are there any general questions on candlestick analysis? Well, before we get to the live charts, or to each individual's, it was a good football weekend, except one of my good friends got arrested over the weekend. Pittsburgh's got a very excellent zoo, and a couple of their in their aqua marine area, I guess, is they've got a couple porpoises that they can't figure out how old they are. They're extremely old. Maybe in the hundreds of years old. And they've discovered as long as they are eating seagulls from the New Jersey shore, there's no reason why they can't live on forever. So I had a buddy that decided he was going to make some extra bucks, and he started going down to the shore and capturing a lot of the seagulls and bringing them back to the Pittsburgh Zoo. But this weekend, they caught him driving from New Jersey into Pennsylvania, and they arrested him because he was transporting goods. Well, anyways, they charged him, and they charged him with ludicrous They were charging them for transporting gulls across the state line for immortal purposes. They were so devastated. All right. So any questions on candlestick in general? I have a question about volume scan. I understand that you scan for 200,000 shares a day. How do you look at volume during the day? I don't. Joey, I just have to assume that any chart that I am looking at is going to have decent volume because it trades on an average of 200,000 shares or better a day. So I don't have to worry about what it does during the day because we know no, that's going to probably trade. And there are two reasons why I want 200,000 shares a day. One, so that if I put on a position or get out of a position, I do it instantly. I don't have to wait around for them to fill the trade. And two, the more volume you have, the quicker the signals and patterns are evident. Vasu, these are all daily charts. So because I'm a swing trader, my trade's going to last anywhere from 2 to 10 trading days. So I'm going to be trading off the daily charts. Now, if you're a little bit longer term, you might use a combination of a daily and a weekly. Okay. Any other questions? If not, Jim, go ahead and do the double line. And in 3.8 seconds, do the next double line. Facebook, as you can see, after the gap down, it's continued its downtrend. You stay short. Boeing, right now, you can see how it failed at the 200. Even though that's not a sell signal, tells you pretty much failed, so I'd watch to see what happens once it gets to the 50-day moving average. Smith & Wesson, you can stay long. T-line crunch up through the 50. CHRS, you can stay long on this one. Nothing wrong there. TSCP, not enough chart to latch onto. If you like this one and know what they do, you could buy this one on positive trading tomorrow and then don't let it close back below the T-line. NRXP, let's get this big enough. That one you could buy. Make sure your volume's good on a $3 stock. But if I was buying this one, I'd want to see positive trading tomorrow, and then you don't let it close back below the T-line. You can see how this one failed once it got to the 50. Not only failed, but did a shooting star, failed right at the 50, failed right at the 50. I would have closed this one out today and wouldn't pay attention to it until they can get it back up through the 50. RGSC, Avaro, that's not coming up. Upstart, that's nothing. Would not be long or short. You're going absolutely sideways. Yes, if you were short, I would have covered the short. There's no direction to that giving you any benefit of seeing which way it's going. ASAN, stay long. MARI, this one you can buy. Just make sure, if I'm trading a $1 stock or a $2 stock, I want to make sure they're trading 1 million shares a day so you can get in and out. Evoke, that's kind of a big fry pan bottom. Same scenario, make sure your volume is good. You could be buying this one on strength. And VYGR, that looks like a big fry pan bottom. I wouldn't be afraid to be buying this one on positive trading. JNUG, gold stocks are acting better. You can stay long on this one. SE, you can go short on this one. That gap down, probably alluding to coming down to the bottom of the trend channel. Sophie. If you're doing anything, I would go short. I definitely would not be long on this one. Microsoft. If you're short, stay short. It's just not a very active one to trade, but right now I'd be heading for the short side. BNTX, another wave 1, wave 2. Get ready to go short on wave 3. TGI, stay long. Kind of broke out through this level with a gap up, implies there's going to be more upside. Micron, I think they today, still not a very good looking chart. If it opens lower tomorrow and I was long, I'd close it out because they're probably coming back to see if the 50 is going to act as a support level. This one should have been closed out a few days ago, probably right there after the hanging man. Now you wait to see what it's going to do down here at the 50. And Myra, you could be getting ready to go short on this one. If you were long, remember, there's just one simple rule of the T-line. If you're long and it closes below the T-line, close it out. The probabilities have gone against you. And if you can see that the market's also trading off, when a stock you have is closing below the T-line, that's more evidence that you want to be out of that trade. AI, another one that looks like it could be heading lower. And net, we did. If this opens lower tomorrow, you got a bearish doji sandwich. I would suspect coming back down into this range. ASO, you can short this one, especially right there. That would tell you your next target is down here at the bottom of the channel. Nice uptrend. Make sure your volume's hefty. Stay long, use the T-line as your stop. ASML, stay short. Another one that has a bearish flutter ticker signal and a doji sandwich setup that if it opens lower, you're starting wave 3 to the downside. ATVI is a buyout at 95, but we talked about this one earlier today. You want to see, first of all, whether the buyout's going to go through. I mean, that's a good distance away from the buyout price, which means there might be some problems with getting approved from the SEC to do the buyout. So I don't know what to tell you there. Now, this might be a case where you're better off, if you own the stock, closing the stock, and then buying maybe a 85-90 spread. But if it works, you can make good money on the spread. If it doesn't work, you don't have a lot of money still sitting in the trade. Smith & Wesson we did. Stay long. Do. If you're anything, you stay short. Just not a very vibrant or a very strong downtrend. ENPH, the failure at the 50 tells you you're probably still in a downtrend. Get ready to short this one on lower open tomorrow. You can stay long on Starbulk, but it definitely you want to see this open positive tomorrow. What to do if you're long? Harry puts your safety stop just below today's low, which would be below the T line. Roku, that's kind of a nothing chart right now. If I had been long, I would have closed it out today, but I wouldn't be short either, so I wouldn't be long or short this position. MQ, nothing there either. If you're long, it has to open positive tomorrow. If it opens lower, close it out immediately. Apps, stay long. AUPH, kind of a nothing chart. If you're long, it needs to stay above the T line. I would have closed it out yesterday after it did a bearish left-right combo after a shooting star failure. So I probably wouldn't be long or short this one. This one has to open positive tomorrow to stay in it. If it opens lower, close out the position. Small cap bear, you can stay long on this, or you can go long on this if the market's open lower tomorrow. Zillow is pretty strong. I wouldn't be afraid to be buying Zillow. The gap up, the doji told you which way they would take it. They took it positive. UNH, stay short, especially if this opens lower tomorrow. Matador, if you've gone long or you're staying long, just stay with it as long as it stays above the T line. That's the one I keep missing. Stone, you stay short on this one. You're still in a downtrend. Notice how they came right up to the T line today and failed. You did AI, you want to stay short on this one. Gear, oops. If this one opens lower tomorrow, you close it out. Kim, can you please share your notes on Dagwood? A Dagwood is the opposite of a McMuffin. It's an evening star signal followed by a doji sandwich or your evening sandwich. MDRX, you can get ready to go short if this opens lower tomorrow. Oh boy. MGM, the only thing you'd want to be right now is short, but then because you don't have a strong sell signal, you watch to see what happens once it gets to the 50. Coin, if you're short, if you were long, you would have been out of it yesterday. If you're thinking of going short, it needs to open lower tomorrow. QCOM, same scenario. If you want to go short, look for a lower open tomorrow. but you wouldn't be long this one. MDB is doing a potential bobble breakout, but that's the potential. If it opens positive, you want to see it come up through the 50. If it opens lower, they failed. You're still in a downtrend. We did JNUG. The gold stocks are acting well. Oh, what happened there? You'd stay long on the gold stocks. Oh boy. Probably not. There's probably more downside, especially to, so if you're shorting it, yeah, I wouldn't be afraid to short it on weakness. I don't know. You can use this on SC. Means you're heading down into this range, which looks like could take you down to the $80 level. Okay. So we're still in a downtrend. And it's more compelling over here on the NASDAQ with the bearish flutter kicker signal. If they open lower, they're eventually heading back to this level. All right, I guess with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. Can you show us your two favorite tickers today? Oh, I've got a star next to this one for going short, BRKR. I don't really have anything that I would want to go long right now. Let's see. I have this one circled, and that one you just stay long. Now SE, with that gap down, that's a viable short also. And it looks like the retailers, Under Armour, would be another one that you would want to short on weakness. No, there's not any real good fry pan bottoms, which you wouldn't expect to be any good fry pan bottom. Oh, there was a couple that, but they were low dollar ones. I remember what the there was one that was around $3. That was a good fry pan bottom. I meant to write it down. Oh, you think of Smith & Wesson? That's got a decent fry pan bottom to it, yes. Because this one was rumor. You could buy this one on the rumor. No reason not to if it breaks out above this level after the kicker signal. All right, everybody. We'll see you bright and early tomorrow morning. We'll see you then.